All right, guys, a lot of you guys have seen the last two videos that I posted about how to trade during the Russia-Ukraine conflict. And I got a little bit of backlash, but a lot of you know that my wife and I have been trading for years. I've worked for the second largest bank in the United States, and so I understand how to trade like a bank. But then again, who would trade when price is already dipped? I will, because I understand the fundamentals of trading, and our job is for you to understand as well. And there's a time when to trade price action and a time when to ignore it. And this is the time to ignore price action to a certain extent. So let me show you a few clips of the two last videos that I posted pertaining to this war and why most people wouldn't sell during this time. Here all the way down to here, and we have about 550 pips in just a matter of a few days. And like I said, I will continue to sell. Although most people say, it's not a good time to sell because price has been dropping. It is a good time to sell because this is a war. This is not your normal price action. We're not paying attention to past price during a huge conflict. A lot of traders don't talk about this because they don't understand it because they've never been in a war when to trade. But it makes logical sense. Whenever you have a currency or even stocks that are directly impacted within huge tension, like a war, which is bigger than a pandemic, you want to trade bearish here. And it's going to continue to drop. You don't want to look at this price here and say, I'm going to stop and eventually buy because this here is a support zone. This support zone doesn't care. The war doesn't care about your past support zone. It's making its own support zone. Or how many of you guys remember this video on February 20th before Russia even invaded Ukraine? Exactly which currencies are affected, right? So number one, before we do that, we need to identify who is a part of the war. We know that it's Ukraine, we know that it's Russia, and if they get involved, then NATO is going to get involved. And NATO consists of many different countries, typically European countries, and it can definitely affect the euro. And that Russia supplies a lot of Europeans oil. Russia can withhold the oil to these European nations. It's going to cause the euro to rise or inflate the euro, which means it's going to drop the value. So if you're trading those two currencies, the euro will tank. All right, so if you're a swing trader, even an intraday trader or a position trader, and you sold on February 20th when I dropped that first video, you would be in profit. Now, on my second video on March the 1st, I told you to sell while most people were trying to buy. You would still be in profit. Now, let's take a look at some of the pairs that I mentioned right here. All right, so one of the pairs I mentioned was Euro, Australian dollar. I said the euro is affected by the war. Australian dollar isn't quite affected by the war, so there's going to be a strong push down. At this time, it was March 1st, 2022, which is this candle here. And most people wouldn't dare to sell because it had dropped so many pips. And let's see how many pips that it dropped originally from here to here, over 540 pips. Why would you want to sell? And typically you wouldn't want to sell, especially if you look left for clues. You see that this is a strong support zone here. Why would you want to sell? And I told you guys that there is no need for price action at this point during a huge conflict. The euro is going to continue to tank. And as I play it, you will see it continue to drop. Now, from that point on, as I get my measuring tool from March 1st, as you can see below here, from March 1st till now, which is the 4th, it dropped an additional 608 pips. So you would be 608 pips in profit if you took that trade during the day that video had dropped. Let's look at another pair. All right, here's EURJPY. Euro is the dominant, is the base currency. That's the currency that's being affected. And the Japanese yen is not so affected. This is on March 1st when I dropped the video. Who would dare sell when it's at a current support zone here? I would, because I know that price action trading isn't quite useful at this time when there's tons of bad news against the euro. You can even throw in an indicator, and let's just throw in RSI, Relative Strength Index. And for those who are aware of the RSI, you know that when price is at its oversold level, you want to look out for a buy. Indicators aren't going to work. Vladimir Putin doesn't care about your indicators. So let's see what would happen if you sold at a time when most people aren't thinking about selling. They're actually thinking about buying. And if we hit play, this is what would have happened. Let's take away this RSI here. Now let's measure the pips from March 1st. So current, which is March 4th, and you would have gained 300 and almost 50 pips. and you will still be in profit. Now, there are a few more examples of currencies that I listed, and if you're unaware of it, you can go ahead to that video and I'll put it here so you can take a look at it. Now, let's see what happened in the news about non-farm payroll and how that can affect the United States dollar that happened today on March 4th, 2022, if you're trading the euro versus the United States dollar. This is how you trade the news. All right, so I'm on forexfactory.com. This is what I like to look at to get my updated news in real time. So you can see that there's a red folder for the United States dollar, non-farm employment change. And this is a move maker for currencies. If you don't know anything else, this is a move maker for currencies. So if it's a bad news, it will definitely tank that currency. So let's go ahead and take a look at it here, see what happened. And we were aware of this at 8 o'clock in the morning. And as we look a little bit further in that, we see why traders care. Job creation is an important leading indicator of consumer spending, which accounts for a majority of overall economic activity. And so just in brief summary, we can look at the actual here, which was in February 4th, 2022, and it looks like it was a gain. So this is good news for the United States dollar. And we have this every single month. So this is a key indicator that you don't really want to pay attention to price action or indicators like such as an RSI or Bollinger Bands during huge news like this. Let's see how it affected the Euro United States dollar. Now, when we go back to Euro United States dollar, as I mentioned, the euro is the one impacted, so it's tanking. So if there's good news for the non-farm payroll for the United States dollar, and it's on the right side, which is the quote here, and on the left side, it's the base, the euro, which is the bad news, it's going to plummet even further down here, which is a result. So it's really important to understand what's going on each and every day. And don't get me wrong, price action is huge, but it's just not as effective during a crisis, specifically a war crisis. So what's next? Should you continue to sell as prices plummeted? Can you sell right now? I'm going to answer your question. Go ahead and drop it in the comments and let me know what pair you're going to be trading, whether long or short. I really want to hear from you. And then I want you guys to go ahead and join our Telegram because we answer these questions and give you free tips and trade ideas in which we're going to include whether if it's good to sell, where price is currently at now. Go ahead and hit the like button if this helps you out. Subscribe, hit the notification bell so that you can continue to get content like this each and every time we upload it and you don't have to miss a beat. And also go ahead and take a look at our academy if you're interested in further your education at bkforexacademy.com. We can't wait to see you in the next video. Have a good one.